Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, July 17th, 2024. It is 9:43 a.m. Eastern Time, so I'm starting the video and wanted to share my thoughts on the market as well as some of the individual trade ideas. What I'm going to do for you also, and I'm soliciting feedback. I'm going to go through my alert log. This is my alert log. I can go back as far as 30 days to what's triggered. Many of these were already shared as trade ideas, and some of those I haven't. So I'm going to give you additional trade ideas. These are almost all individual stocks. There's one index in there that fired off. But I wanted to ask you guys, I don't get most of the feedback I get is on the market, and I get that. Most people want to trade the stock market. They want to trade the tech-heavy NASDAQ or the S&P or whatever. I used to, in the past, post a whole lot more. If you've been with me for a while, a lot more individual stocks, but I get just about zero feedback on those lately. And I still, post those trade ideas for you all the time. But again, just don't get any feedback, positive or negative, on those. And we've had a lot of those pop, and really, some nice setups lately. And I've got some more I'm going to share with you when I go through this list. Let me first just start out. Remember, when if you're interested in any thread, any comments, sometimes they're off topic, but I usually will follow up unless somebody asks a question that's unrelated in the same thread on the index market, equity markets. For example, here this morning, I gave you a chart for the anyone that took the small cap trade last night or yesterday. I told you before the close, right at the highs, I shorted. I'd use RTY. That's the small cap futures, but I gave you the charts of IWM. Remember with those targets. So I just want to say there's that chart for you futures traders. I gave you comparable levels. In the video, I gave you, I drew it, screen draw, told you these gaps are your targets with this as a, I believe it was right there. Let's see, 207, 211.13 is really a minimum target, right? And kind of a preferred swing target. Told you it should zig and zag down this way if I'm right. We're good, nothing big so far. Where the futures were, wow, small caps pushed back to break even. Either way, they broke the trend line, and let's see if we get a solid close below it. The first target there is that first gap. It's a target zone. It's pretty tight, less than 1 point on a 200-point security. So you're talking less than half a percentage range. And then that next gap right there, traders will either buy the bottom of the gap or the bottom. And yesterday I gave you 211.13 is really kind of my preferred swing pullback target. And then in the update that I gave you on the futures today, and that's about a 6% drop if hit, I gave you, and I'll get to that in 1 second, this downtrend line as well as this intersecting uptrend line right here as a potential deeper target. And that would be somewhere along the lines of a drop of about, if and when hit, maybe 8% or so. So let me give you that chart. I'll give you the live chart if I can find it here. I've got so many charts on the futures. All right, so this is a 6-month chart. I might have labeled it as an hourly. My bad. I'm right here. It's a 2-hour candle. I would have screenshotted this one this morning. Here's the hourly. Oh no, I gave you the hourly. There it is. I must have a couple of them up. And so you've got a steep uptrend line right here, which we just hit now on the futures. And so same story. I gave you the whole basis of this one wasn't on the trend line break. And I said that would help to see that hit, but it's a very steep trend line. The whole basis of that short entry yesterday on the small caps was IWM and as, if not more importantly, the regional banks coming up to major resistance. And that was mostly what it was, KRE right here. I also mentioned that. There it is, full tag, perfect. Well, up another percent. Remember, 56.60 was my level. We're at 56.61, close enough for government work. Consider this a hard entry here with a stop somewhat above the top of that, sort of a minor resistance above it. 58.27, I would consider a stop based on a daily close above that, solid daily close. So you're talking about maybe a 4% stop. Minimum target's going to be a back test of this downtrend line. That's about 12% plus. That gives you a 3-to-1 RR if hit. And I don't make many promises in this game, but one promise I give you: if the KRE does pull back 12-13%, IWM is coming down with it, kicking and screaming, just like this was the near sole contributor to the recent run up in IWM. So there's an update. And again, futures traders, you have the targets there on RTY, which I just gave you right there. 22.18, 2180, 21, almost 2150, and then a deeper potential target here, these intersecting trend lines right there. Okay, now on to, let's just jump over to the, I just had an alert fire off. I don't know if you could hear the bells go off, the little chime or alarm on the, where is it? On the NASDAQ composite. So now I told you I didn't have a lot of indexes in there. So here we're going to go. Let me see if I can make, I don't think I can make this big. I have to go in and edit the font, but I can read them out to you. This is sorted chronologically by 30 days. So let's just start here with the NASDAQ composite. That's the first one. That alert just fired off. So there it is, guys. This is the big wedge. So what I'm doing right now and what I want to do is speak to two different subset of traders. And I fall in both categories: active trader and longer term swing trader. So there's the NASDAQ composite breaking down from that big bearish rising wedge. And QQQ is the ETF for the NASDAQ 100. The difference is a composite, all the NASDAQ stocks are in the NASDAQ composite. The NASDAQ 100, which QQQ tracks, as the name implies, is the 100 largest of those stocks. So you have more concentrated holdings in Apple, Microsoft, NVIDIA, Alphabet, Amazon, Meta, and Tesla. There it is. So this one gap down today. There's that bearish rising wedge. And this is a trend line here, a minor trend line. This is the trend line we're targeting on the 60-minute chart, the trend line off the April lows. But we're right now at support. That's what I got out to you this morning, pretty much. We were at that support level. Here, let me take it down to the 60. Which is also the bottom of my market top range right there, right? We came within 1.5%. Still open to one last thrust up there. I'll be, unless something convinces me otherwise, as or even heavier short if we get there. But like I said, I'm very happy we don't. We came close enough. 1.5%. My fibs still line up pretty well. Otherwise, so we'll see. All I can tell you definitively, that's what I'm going to tell you now. Yesterday, as I said, we broke down. It wasn't very impulsive. We went sideways for a while, but we were down below, back testing, and then boom, impulsive gap down today. And now we're right at support. Remember, I can give you an update. That was a chart I gave you on this trend line break right here. We went down, then this trend line formed. We had another reaction there. At the time, it didn't exist when I gave you that chart from, that was, where was that? That was in this post. That was right here, July 9th, right there, giving you the sell signal on the break of that trend line. And this is why I say the charts are dynamic, and this is why I do this every day, because any 2 points can be connected at random. It takes a third distinct reaction, in my opinion, to form a trend line, and that's what you had there. Then you dance on it for a few days, and you broke it, and then back test it, and then boom. And this is the kind of thing I like to see. That's an impulsive. What it does, especially in a hot market, it tends to trap longs and also do what I like to see done. I like to be ahead of, short ahead of those, because it denies shorts an objective entry. There's a lot of folks that have just been henpecked and nervous and want to short this market, but have been waiting for the right, perfect green light to come on. But they don't want to short a 2% gap down. The Qs are down 1.84% right now. And so it would be ideal. Now, look, I said the odds for reaction are elevated. It's support. It's a good support level, very good support level. The dip buyers, quote unquote, doing my little finger thing, air quotes, should be stepping in here. But if they don't, all the better. Remember, we had a kind of a hammer down day last Thursday there, and so I plan to sit tight. Normally, I might game a bounce here, but there's so much hot air in the market, at least for the time being. And I'm going to go over the charts. I may change my mind as I go through this. A lot of times I'll get these videos out to you and go over the charts as I'm doing them. I want to get this content out to you as soon as possible. But right now I'm going to show, well, I showed you in yesterday's video, a lot of the, nearly half of the market leading fangs have broken down. QQQ was below trend, NVIDIA was below trend, just NVIDIA alone. And the fact QQQ, tells you, hey, you want to be, those are sell signals and pretty powerful stuff. All right, let's get to the rest of it. So this is a battleground right here. If you are bullish, step in and buy. If you do not buy, I do not know why you would not buy here. That's the best support level that I've seen in a while. There's a big thin zone there, and I talked about that. These thin zones, that's what happens. They get filled pretty quickly. It got filled with a gap down today. And so I pointed out what I called potential divergence on the futures, but we have a slightly lower low. If QQQ could rally here, you'd have almost flat line, equal lows on the indicator, and then lower lows in price. And that is the potential to put in a divergent low and give us either a back test or even a push to the top of my market top range. So as a swing or trend trader, and I do have different accounts, I'm willing to ride that out up there. And I will continue to hedge up appropriately. Today's a good example. Let me talk on that because crude is up today, and I told you that's the one sole hedge that I've had lately. And there's a great example. It's up 1.4, so I'm down on that one. But then QQQ is down 1.75, so winning again. This has been almost a day-to-day net positive trade. Every day the Q's been up for the most part. Crude's been down more, and here's an example where the crude is up, but yet the market's down more. So, continue for both fundamental and technical reasons. Keep that trade on for right now. And when my confidence goes up, my confidence is going to go up if and when this trend line's taken out, that we're going a lot lower. And at that point, I won't care to be hedged. More than likely, I may still be long or short crude for its own reasons, but I don't think we'll need any hedges at that point. Okay, so that's it in a nutshell, guys. We're at support. Support is support until unless broken. So what do you do right now? You have one of two things. You either buy it right now or you cover it. Well, a few things. If you're short, you can cover it, take the quick, it's not much, 2%, whatever. Well, actually, no, that was a sell signal right there. So it's, again, not much. It's 3%. 3% from that sell signal right there on the break of that trend line. Or you go long here, or even you cover and go long. You go long, but what you don't do, unfortunately, and it's not objective, it's a short right now. Again, when you pull back to support, especially during an uptrend, you either buy that support, or if you're bearish and you want to get short, you wait for a break of that support. And again, talk about this often. You can wait for the intraday break. If it's impulsive and it looks like it's going to stick, take a shot. But then a lot of times they'll ramp it back up to close the 60-minute candle above there. That's it. But again, I think any reaction is going to get sold into, again, due to the amount of hot air in this market. I think I think the risk of this, where that just they don't let the longs out and they don't let the shorts in, is coming. And that's it. So as of right now, let me show you on the futures. I did this morning. This is a 15-minute chart of NQ. Let me show you the 60. That's not it. That's NG. Here it is. There's that. So by unconfirmed divergence, if you follow me for a while, I make a lot of terms up. One of those is you have positive divergence. You have higher lows in the indicators, PPO and RSI. But in my book, it's only confirmed once the PPO makes a bullish crossover to effectively put in a higher low. Because it's a momentum indicator, it's pointing down, it can continue down. And so you're going to have divergences and downtrends, and so it's unconfirmed. And if we go much lower, it'll be taken out. And that's what I favor. So I just wanted to point it out for you, because if we do go up to the highs, that very well could be your technical catalyst right there. Again, not the one I favor, but my job is to point things out, give you my analysis. You take that analysis, combine it with your own, that of others, whatever you're doing, and then decide how to trade off it or not trade. Okay, so before I move on, and I'll just get to those watch lists or those price alerts in a second here. That's it. I just want to point out QQQ is at support, a support that normally I would probably game a tradable bounce off of. If you're looking to do that, where to? Well, I drop down to a 15-minute chart. That's what I'd do first. I was on a 60. I've got 30. You can, every time frame you have, that's a 30-minute. There's a 15-minute. Same trend line I'm targeting, so you can see it here. 47.29 support. Where to? Well, there's your first resistance right there. It's about 491. If they take that out, then you've got the next resistance here on the 15-minute is for about 493 and a quarter. Then the top of today's gap, which is a line I already had, roughly about 496.05. And so those are all your potential bounce targets. And I know there's some that are more bullish, looking for much more continuation of this trend and a lot higher highs this year and in the coming weeks, months, and even maybe days. That's it. You buy support, put a stop below, or wider stop. If you're targeting, another 10-20% upside, you can use a much wider stop. If you're only targeting just a run up or a marginal new high, then you want a tighter stop. Your stop should be commensurate with your price target, using a favorable risk-reward ratio of at least 2 to 1, ideally 3 to 1 or better. Okay, now on to, let's do those watch lists and kind of give you a bigger picture too of what's going on. That's why I wanted to do it. So not watch lists, alert lark. So I already covered NASDAQ composite, and that triggered, and that's here's a daily chart. And there's the breakdown. And on QQQ, what I wanted to get to, because I kind of went off on a tangent, active traders, if you want, cover here. I gave you my thoughts that normally I wouldn't. I'm not. But then these are your swing / what I call longer term swing or trend trader targets. And we've now broken down just like the NASDAQ composite. Remember this trend line here? Covered it yesterday. I've been covering it a lot lately on the daily chart. It's gone. It's been clearly, and I don't have to squint to see, is that a breakdown? So that's a sell signal. Maybe it doesn't pan out. But, the day I stop taking sell signals when they're clean and there's a lot of other supporting evidence to it is a day I should just stop, doing what I do. So that's a clear sell signal. All the better if we drop below my market top range, as I said, because that's really good support right now. So if we take out today's lows and we go down to the next targets, that uptrend line I gave you on the 60-minute chart, that's going to be pretty bearish. And guys, remember, it's going to help solidify this bearish engulfing candle, which has the potential, as the previous one did, potential to be mark the end of a trend and the beginning of a new downtrend. That's what they are. They're reversal sticks, trend reversal sticks. All righty. Okay, so we know, you guys know the swing targets for longer term swing and trend traders. T1 right here, beautiful price support, 23.6 Fibonacci retracement level. Actually, off if we hit that top of my zone, it's going to be close enough. I'll tweak those. If we start moving down, I'll move the fibs down a little, and that just means that maybe we overshoot price support, hit the fibs, or again, the fibs are an approximate measure. They just help complement, in my opinion, price support levels, especially when they align like that. T2, T3, T4, T5, T6. All right, so you've had those targets shared with you many times. Now let's just go over the recent alerts. So I already covered NASDAQ composite, and then I showed you the NASDAQ 100. Let me go to this port here. Applied materials I've shared as a trade idea along with the other. This is one of the big chip equipment makers along with KLAC 10 core. So we put in a bearish engulfing candle recently there, big divergent high. I've been talking about it for a while. And it's also, as I like to say, if tech we know leads the market by far. Even if you trade the tech heavy NASDAQ 100, it's half of it roughly. If you trade the S&P 500, it's over 25%, a quarter of it, without the next biggest sector being half of that. So it's everything to the stock market. And then, as I like to say, the semis are the canary in the coal mine for the tech sector. And then the chip equipment makers that make the equipment that make the semiconductor stocks are the canary in the coal mine for the chip sector, right? All makes sense. When orders, chips, Intel and, all these chip makers, Taiwan 7, they see things slowing down, they're going to cancel some orders and on the equipment that they use to make the chips. So either way, Applied Materials gap down today. It's down pretty big. Probably earnings. No, not even. Wow, look at that. Right to the next trend line I have there, following the bearish engulfing candle. So this guy, there's a lot of evidence there as a potential top. We also, you probably can't see it here, we're on a key movement, 50-day moving average is coming into play right here. But if that level gets taken out, then we head down to the next target or targets on there. I just wanted to point out this price action here again, because it was on. Now I just got another alert on Amazon. Boy, these alerts are popping today. I told you that's how I've been saying this for a long time. This is how it tends to work. I start setting alerts like I've been doing in these videos. They tend to go off like popcorn. When the time is there, that's when I know it's there. I start getting, especially on the big names, and again, in the video yesterday, I showed you a lot of the big leaders, big tech had already broken down. So now Amazon joins the fray. Remember yesterday, I told you it was right at trendline support. Boom, breakdown. See it right here? So unless it rallies back up and gets a stick save where we close back on or above the trend line, that's a very significant sell signal, guys. I already covered applied materials. It's hard to go through this list because I've had 2 alerts since I started the video. 2 new alerts, that is. Novo Nordisk right at trend line support. So I always check these when I get the alert. There's a nice clean uptrend line. And that one's at support, coming off a big divergent high. ISRG, Intuitive Surgical, cracking below the trend line, pretty comfortably below it at this point. But again, it's a daily chart. You can check this one at the end of the day. If it's poised to close well below it, consider that a short trade idea for you. My first target I'm going to give you right here is about right there at a 405. Second target 366. This gives you on this one about 6% to that first target and 15% to the 14 to the other one. Next target about 366 and almost 367, and the 200-day moving averages. Beautiful target for you, and a likely target, and nice, very nice. So, on that one, that would be my preferred swing target, and that's a 14% drop. So you can give yourself on that, you can give yourself, say, a 5 or so percent stop loss. So if it takes back the trend line, throw it away. All right, next up, ASML, another big semiconductor equipment maker. Look at that, divergent high, breakdown, gap below this wedge. See this beautiful little uptrend line, big divergent high. You can see the negative divergence. I'm zoomed in here on the daily chart. Then I had a secondary primary trend line, really, that comes off the October lows of 2022. Took that out, all that in one fell swoop. This guy's down 11%. All right, this is what happens in a market with a lot of hot air. It just is with excessive bullish sentiment and shorts blown out. Why does it gap down 11%? Because there's no short sellers to cover. I always say they're the only natural guaranteed buyers. And normally in pullbacks, they go in and they buy pullbacks to cover, because they have a profitable position. And when you get excessive sentiment, they give up. They don't get me, and those charts tell me to give up. ASML, ISRG, I already covered. ASML, I just covered. ETSY, I covered yesterday. Like I said, I gave you some targets, told you those targets are not going to be hit most likely if the market melts down, but if you are bullish and long. So we had a breakout yesterday, closed marginally, but we're back testing right now the trend line. But remember, you have also this resistance zone. If it can clear 67.10, it should be smooth sailing again, unless the market poops to bed, like I told you. NVIDIA, already covered that. There was your sell signal. Yesterday was a solid print. Told you didn't have to squint to see it, and that's why the market is down today, largely in part because NVIDIA is broken down, and that is the king. You put a knife in NVIDIA, you've killed the rest of them. That's the general, 5-star general, leader, whatever you want to call it. So coming up on support, let me just cover it a little bit more. This was, remember, was the first target minimum support zone hit here. Top of it hit again. We're there again. So once again, for those of you who've been wanting to buy NVIDIA forever and a day, as I said back here, as I said here on the trend lines, those are your objective long entries. For those of you that are short or looking to get short, a break of that level, which I think is likely because we've already had not 1 but 2 reactions off that level. So I have zero desire to game a bounce. This is still one of my biggest positions, and I expect these targets at minimum to be hit here. And of course, I have longer term targets, which I've shared with you quite a bit in the past. If you need to see them again, let me know, or just click under this post on NVDA. It'll load all posts with NVIDIA in it, and then about a month or more ago, I posted those long-term targets on QQQ, SPY, and NVIDIA. I gave you static charts, with those targets. All right, next up, We've got Broadcom, AVGO. Let's toggle over to a daily chart. Alert fired off on that. Maybe that was on a 60-minute. What time frame was I on? I don't even know. But because I'm going down the line here. Here you can see here, guys. That one triggered on the 15th, right? A couple days ago. There it is. So this one peaked back here, and you had a clean uptrend line right there. There it is, breakdown. And now it's continuing lower. So, and probably headed to at least this purple longer term uptrend line. Broadcom is one of the biggest semis, most important ones out there. That's 19% more downside to hit that target. Most of you are pretty good at math. You can figure out that if Broadcom drops 18, 19%. And I'm going to give you a horizontal level. It's beautiful. Comes right in. There's your target right there, 143.50. If you care to short Broadcom, that's 17% more downside from where we're at now. And extremely unlikely that Broadcom's going to drop 17% and the market's going to go to new highs from this point, or the semis. All right. What's next? Where was I? AVGO, NVIDIA, I already covered. Alphabet. And see NVIDIA, you can see these were all the different, alerts that we've had. We've had multiple entry points, breakdowns on NVIDIA. This one is Alphabet, which I told you in the recent videos, including yesterday, broke down, back tested for 3 days. On the third day yesterday, impulsive rejection, which I told you is a check mark. That's what I like to see, because the problem with backtesting, you can continue to backtest for a while. Sometimes you can even regain the trend line. But once you get that impulsive rejection, there's your check mark that we had a breakdown and a backtest, and gives you kind of a more all clear to add to short positions on that. So if you did, it's up down another 1.5% today. And more importantly, again, this is Alphabet. So you don't, all it matters is what these top handful of stocks do. And it doesn't matter how good the utilities or energy or even the financials are doing. These guys have the highest weighting on the market, both mathematically and the biggest psychological impact on the market. All right, next up. Where were we? APO. Apollo Asset Management, see that was just a little whipsaw down to the 50-day moving averages. But it's a setup for you. Look at that beautiful, beautiful uptrend line, big bearish rising wedge. If you're interested, again, let me know. I don't want to spend too much time on these because I don't get a lot of feedback on these individual stocks or even, the sector ETFs, ITB I threw out the other day. We had it as a short here, mentioned as a long here. That thing ripped up 18% since highlighting it just 2 weeks ago, and I haven't heard a single person that took it. So we've got, others that are running like that too, but not many, but enough. Like I said, I've focused mainly on the, right now, my focus is on the short side, but I've been making a very strong point to highlight any longs that look good. And we've had quite a few, and I'm going to get to some more here in a second in my watch list because I've covered these in the past. My price alerts. All right, so that's, next one was AMBA. I highlighted this one as a tech semiconductor that looked bullish, and I gave it to you here before the breakout, and it broke out right there. That's, let me move my alert log. Downtrend line, breakout. If you took it, we hit my first target already, and that was good for about a 12-13% rally. Even bigger if that level breaks out. So if all this, if the market can just shrug off everything I'm covering today, these breakdowns and the video. But again, we're at support, guys. Remember that. We're at, pretty good support on QQQ. So if we can rally from here, this is still one of the better looking ones. This is a very, very nice resistance level. So you had the breakout there. You already had a 12-13% run into that resistance level. And if it breaks out, those are my next targets there. Unlikely based on what I've showed you with the NVIDIA and these big techs breaking down. So if you took it, you either tighten up stops at this point or book profit. If you didn't already book profits, that is. And again, if you're saying, okay, yeah, I see NVIDIA breaking down, they're just going to buy the dip, Randy. I'm going to move this trend line up right now. This price resistance level, guys. I did that because I had it slightly I wanted to come in and capture the highs better in this recent high, so about 65, 68. So again, and I went over this in recent videos. There's some of the beat down stocks, including semis, the ones that I am shorting. Like I said, the ones that are big off highs, and overloved, Nvidia, SMCI. Just about all the others, most of them. But then there's some of these that are have just better risk reward profiles. So that's it. So again, that one was highlighted to you back from the last few weeks a couple times. IPGP, another one, another tech, another semiconductor maker. One of my favorites off this support zone right there. I think we highlighted right off the bottom, if I'm not mistaken, up 13%. So again, I don't hear anybody say, "Hey, got that one." Yeah, I've been bullish, and but we hit that first target, and is it going to make to the rest of the targets? I think I give it a high degree of confidence. If I'm wrong on if the market is at or very near top. Now, let me put a little asterisk in there. Remember, QQQ came within 1.5% of that preferred top of that market top range I gave you. And could still, if these 60-minute divergences play out, we could get that one last thrust up. If so, you're going to see semis on balance, not all of them. Some are starting to already roll over. Some have clearly broken down. But then these, you'll get more bang for your buck. In other words, let me say it another way. This one probably has more upside than NVIDIA and Taiwan Semi and a lot of those others right there, especially if the market continues up and QQQs take out the previous or make a new marginal high or any highs anytime soon. So again, I've been sharing these. Now, by the same premise, resistance is resistance until that's broken out. So you need to pop T1, which is now 91.60. So there's IPGP, which again was shared in recent videos. And NXPI, this one's a short setup. I had an alert trigger, but I must have just kissed a trend line, or I might have tweaked the trend line. Still waiting for a break of this trend line. First target 263, which from where we're at right now would be a drop of 10%. Next target 238, that'd be about a 19% drop if hit. Again, pending a sell signal on a break of this trend line. IWV, I had a little intraday punch as a great example. Intraday break, or this trend line right there, that would have been on, I think that's the day it fired. That was July 2nd. And that was July 1st. Oh, July 1st. See, you can see it pierced the little skinny part, the wick, the candle, shadow. Tail of the candle pierced it right there, and then again the next day. But both days closed back above it. This is the Russell 3000 index fund. This is another major index to watch. And so what I do at that point, well, I'll keep the line basically where I had it. It's still there. Break of that will help to solidify a sell signal in the market. So this is, again, IWV, Russell 3000. KLAC, another big chip equipment maker. Boom, look at this. Booyah, that is a nice sell signal. Beautiful uptrend line. This has been the story of this market. I've had trend lines that broke back here, and I highlight them all. Sometimes you break down and never look back. Sometimes you break down, as you did here, and you backtest, rolled over, put in a marginal new high, a still divergent high. We've had divergence on this one for a while. And just because it didn't play out for a deeper drop back then, again, it was marginal from the breakdown point. It was about 14%. The target on this stock, where I see it going before all said and done, is you can see this weekly chart has targets here. 542 would be a minimum long-term target for me, and that's down about 39%. Next target is down about 50%, very likely to be hit. And I do believe ultimately, before all said and done, this one's going to come down here to 287 in this primary long-term uptrend line. That is the long-term uptrend line off the bull market lows from beginning back in 09. And so to put it in perspective, when I say marginal, everything's relative. 66% is the downside I'm looking for this stock before all said and done. So And that's, that has the potential to be a start. You got a big old fat bearish engulfing candle as well. And again, just a beautiful clean up trend line. That's a high probability sell signal. And so what do you do now? Any back test would be an objective entry. And if we take out the top of the bearish engulfing, there's your stop point right there. All right, next up. We're almost done. We're getting down here. JNK, I forget where the alert fired off. It doesn't matter because this one I've talked about recently. I see a big trade coming up when credit spreads start to blow out. They've been extremely and unusually low, not pricing in virtually any risk. And so I can tell you on both JNK, which is the junk bond ETF, you've got this big, first of all, resistance, price of resistance. This is where it's been capped out since late last year in December, peaking out here. And all along, so it's making these equal highs with lower lows, big negative divergence. And maybe that was the alert there, this trend line, and it's not so clean. So I'm going to just remove it because I really can't make a clean trend line on it. I'll just leave it right here for now. All I can tell you, at resistance, kind of like with small caps, and they've been rallying too because, you tend to see that. Small caps are quote unquote, we used to call them back in the day when I was a broker, we called them the small craps. They're small companies, their fundamentals they're not sound fundamentally, most of them. They're highly dependent on borrowing. And so junk bonds will rally in line with those because that's junk bond trades more in line with the stock market than the bond market, and it trades more in line with small caps, things risk on, risk off. Either way, so same premise for shorting the small caps the other day. Yesterday you can use on JNK, and you could probably even draw a little minor uptrend line. And there's all kinds of, you can Google high yield short. I forget there's a ton of ETFs out there. If you don't want to short this one, you can buy an ETF that'll short junk bonds. HYG, by the way, is your other junk bond ETF, and that one's also making virtually equal highs here. Marginal, even better when it makes a slightly higher high. So I'm going to pull this trend line down. Why'd I do that? To capture these highs from a technical perspective. Boom, 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 boom. And now nothing's more bearish than a failed breakout. So you broke to slightly above there. Big divergence when you did it. You can see here, negative divergence. So if this rolls over high yield, which I think is a good short trade, there's your targets right there, 60, 76, 74, 75, 76. And you need to beta adjust up because bonds don't fall. Even high yield bonds don't fall as much as stocks, although these guys do go up and down more than treasury bonds. So you might not want to do the full 2.0 plus that I usually do on treasuries as far as your position size. Alrighty, junk. There's HYG. I was in there too. Soybeans did not pan out. I don't see a reason right now. It's got big divergences. Corn looks a little better, as I mentioned lately throughout corn, and but it's still got some big divergences here, and I still think longer term it looks good. It just can't seem to get going. Wheat, same thing. Big divergences continue to build, and I will not take my eye off the ball on these guys. Corn looked a little more constructive. I gave you on the 60-minute chart. So right now, this is my top pick and only position in the grains, but I'm probably going to get back into wheat and corn soon. I'm just been hyper focused on the equity markets lately. And race. These are just alerts going off. Again, I'm giving you kind of an eclectic mix of trade ideas. See, that one pierced the trend line. Race is Ferrari, by the way, guys. The car maker. You have 404.45 as just beautiful support. Look at this trading range right here. And not only that, so this is what I love, these kind of setups. So you have a very super well-defined trading range. Some eyes only see this. Other eyes see this, the trend line that I had the alert on. So if you take out the bottom of the trading range, which now is your BOD, by the way, guys, BOD, benefit of the doubt support, because if the trend line breaks and those that only see the trend line, they short it, well, dip buyers are going to come in here and may buy that 404.45 bottom of the range. But if and when both levels are taken out, so you could take a starter short on the break of the trend line, take it to full position there. First target, 373.66. Second target zone, I'm going to make it a zone for you. 332. So there's another trade idea for you with profit target ranging from about 12 to 22% on a race. Beautiful divergent high. And I'll probably add a third target. I'll tell you right now. There's your third target, 278 for those that want to swing for the fences. Going to give you about a 35% gain. All right, next up, Micron. Oof, poor Micron. Look at that chart. See, this is, so I said, we look at that big bearish engulfing candle, massive one, and then went on to break the trend line right there. That might have been my alert. Then you had price support right here. Then that broke. You also have almost a head and shoulder-ish pattern, I'm just now noting here, with a left shoulder, I'm sorry, head. Right shoulder, not very big, but either way, I mean, there's multiple sell signals. First with the bearish engulfing, then with the break of this 129.50, and now we're at my next target, 121 slash support. When that breaks, we go down to 106.63, and that's going to be a drop of another 11.5%. All right, we're almost done. PBF. This is just one I had an alert on, maybe triggered there. Well, I can tell you this is an energy, oil and gas refiner. It looks like, yeah, it wasn't even a false breakout. It was a breakout, a rally. It was a bear market rally. It was about 8%. Looking interesting with this big divergent low. Let me see if I can grab, yeah, it's some support here. So there it is, considered a trade idea for you. Now the problem is the trend line's a little messy because we already had one breakout. This one, the story on this one, you could buy it at here at support with the divergent low. Yeah, that's pretty decent support, I can tell you that. Okay, I like it. Stop somewhere below about 38.80 or so, or keep it even tight if we go under the recent lows. Targets, I just, depends how bullish you are in the energy sector and the stock market as a whole. Like I said, if the market takes on the chin, it's going to drag most things down with it kicking and screaming. But energy, I'm liking a lot better than tech. So if you want to trade a long short portfolio, I'll try to find some more energy stocks for you. There's one. ARCC, Ares Capital, needs to break this trend line. I must have an alert trigger and a little intraday pierce. Nothing big there. And Netflix. I highlighted Netflix for you recently as a short trade idea. Off this divergent high with we had a breakdown of the minor trend line, back tested it, perfect back test, and then I set up, I think in the last update I would have covered this secondary trend line and highlighting a sell signal coming to break below it. There was your sell signal, very clear, unmistakable breakdown. And since the breakdown of that trend line, this one's already good for about 5.5%, and still not to my first target yet, which is about 631, then 604, then 542, which I favor. Big divergence on this one. So I think from here we're at, if you didn't take it or if you did, I think there's still at least another 15% downside for Netflix. BBSI. I don't know where my trend lines went on this one. I must have done a split. Let me see. Yeah, there they are up there. Shortcoming of this trading platform. So I have to, let's just forget about this one. All right, guys, those are last 30 days, all the price alerts that I had fire off on this platform. I have other charting platforms and brokers that I use, and I have other alerts there. And, this doesn't include any of my futures. That's it. So since I started the video, and this is why I'm sitting tight, boom, no bounce. Very bearish. A lot of trap rats trying to get out of the ship. We'll probably go on down and could hit that trend line target in short order. Today we're down 2.25. But, if it's a trend day, trend days are like we had back here, where trend day is a day in the market where you start and you either start going up or you start going down. You continue into the close with very few reactions. So main thing is, they're usually going to buy the market at support, and I don't see any. We're in no man's land right now. This is my 15-minute chart, smack between support and next support, where they're going to step in and most likely buy it on QQQ. Comes in around 42.68. And then let me look at futures for you active traders. This is my 15-minute chart. I'm moving to the 50. I'm 60. I'm sorry. Not even, yeah. So there it is. We took out that. No, we haven't taken out the divergence yet. It's clinging on by the skin of its teeth. I can move that line down here. Let me zoom in so you see what I'm doing. So you still have potential divergence. Oh, you are at the next support. There it is. 20,094. Remember this target. This is my 60-minute of NQ. You've had these levels for a while. So they did step in and buy it. If you can see, there's a little shadow there. The tail of the candle means they hit it to the button pretty much. Let's see where that was. Yeah, we hit it almost to the button. They stepped in and bought it, but not very impulsively so far. And so when we take out 20,094.50, next stop is 1921. Yeah, we can hit my target today, guys. Oh, that'd be nice. All right, and that's where, again, this is where they're likely going to step in and buy. If we smash on through there like it's not even there, then remember, Hindenburg's been firing and there's a lot of hot air in this market, and it wouldn't surprise me. As of now, I think that's probably where they'll step in and buy. You've got decent price support there as well. So price support zone, price support, and and this is the way this works. Remember that charts are dynamic, trend lines are dynamic. They come in higher and higher as time goes on. So if we do bounce, then you maybe come in around 19,921.03, and let me just give it to you on QQQ before I wrap up. 60-minute chart. Yeah, the same levels you've had for about 479 in the trend line right here should come in together, and that's going to give us from where we're at today. QQQ is down 2.25. Gives us about another 1.3%, so we could be about a 3.5% down day today, or add on tomorrow if we bounce. And again, we bounce. We're sell signals are on. So any bounce, like I said this morning, any bounces back to resistance, in my opinion, offer an objective short entry or add-on or re-entry if you want to game a bounce. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.